I want to talk to you about something that's been keeping me up at night, and it should be keeping you up too if you have any money invested anywhere in the world. The US government just hit $37.5 trillion in debt. That's over $100,000 for every single American, including babies. But here's what nobody's talking about. We're now spending more money just paying interest on the US debt than the US spends on its entire military. The US is borrowing money just to pay interest on the money it already borrowed. And that's not a government, that is a Ponzi scheme. I trained as an economist, I worked in investment banking and have spent more than a decade investing since. And I've seen this movie before. If you're wondering who I am, my name is Felix Prehn. I'm the founder of the Goat Academy, where we've helped over 20,000 regular investors already protect their money. This here is Baby Rose, who's in charge of research. And I want to warn you, what I'm seeing right now in the markets is exactly what I saw before every major crash. The smart money, the billionaires, the hedge funds, the family offices, they're all quietly moving their money. And if you're not paying attention, you're going to get left behind holding their bag. So by the end of this video, you'll understand where they're moving their money to, so you can consider whether that might be a smart decision for yourself too. Let me just break this down for you so anyone can understand this. Say you earn $4,000 a month and you spend $6,000 a month. What actually happens here? Well, your credit card balance grows by $2,000 every month. And your interest that you're paying every month is going up and up and up and up. Say your interest is now $900 per month. If that was your friend, you tell him, dude, cut back on the spending, right? Or go to get another job. You got to do something very, very, very quickly here. Well, that's exactly what the government does. What the government does is just slightly bigger numbers. So the government collects $4 trillion in taxes. It spends $6 trillion and it pays, so it runs a $2 trillion deficit and it pays around $900 billion in interest. Right? Now, these are annual numbers, not monthly numbers, but you get the idea. So how long can this last? Well, we're not going to go into politics here too much, but just think this through for a moment. What could you do to cut down on spending in the US? Well, you could cut the defense budget, just eliminate the whole thing. Well, that's never going to happen, is it? You could cut Social Security. Well, no one's ever going to get elected doing that because you'd have to cut it in half. And no one's ever going to do that. So the only way out, the only solution from a government point of view is what? It is to print more money. And that does a thing that is called inflating the debt away. But what it actually does is means your dollars are worth a heck of a lot less. So for you, what does it do? It's a tax. Inflation is a hidden tax that is not approved by Congress, and it makes you poorer. Your dollar is worth a lot less. I had a student who had, quite a well-off student, who had $500,000 in CDs, sort of a fixed income thing, like you get a certain percentage, right? Well, this one's trying to destroy the keyboard here. What happened is, well, yeah, it was paying some sort of interest, but not very much. Inflation was at 6%. So what actually happened? Go forward 1 year, that $500,000 became about $470,000 in actual value. You don't see it, it's hidden, but it makes you poorer. This isn't a conspiracy theory, it's just basic maths that smart money has figured out years ago. So what is smart money doing? Well, let me show you that, and I've made some pretty charts on that, but just to hit this home, the debt numbers are insane, right? So who's moving first? It's the institutions. Ray Dalio said something worse than a recession may be coming. Jeremy Grantham says there's a 70% chance of a 50% collapse in the market. And Paul Tudor Jones, one of the smartest hedge fund managers in the world, says shift to Bitcoin and gold. I'm going to talk about that in a moment. And by the way, none of these videos are ever sponsored. I'm never like paid to pitch a particular stock or a particular thing or any of that. We just don't do that. All we do here is inform and educate. That's what this is all about. And before we really dive deep into why are institutions selling Apple, why are they moving almost $900 billion of money, why are most of them bullish on bonds, the one thing that retail investors never ever get into, the key thing to all of this is what? It's knowing when to sell. Institutions understand that. They have a rule book around it. It's pretty simple. A couple of steps. They automate it. They don't make emotional decisions. They don't get emotionally attached to a stock. And in my humble opinion, that is the number one factor that separates performance from those who do well and those who don't do well. It's like the lowest hanging fruit. It's the thing that moves the needle. If you want to learn that, I will therefore do one thing for you. It is 100% free. It'll be a live educational webinar this coming Tuesday, felixprehn.org/training. And I'll teach you the stuff for an hour or two. And I'll literally teach you exactly the rules that I learned from my Wall Street mentors. So you are no longer, trying to figure it out as the market crashes, because that's the worst time for that to happen. And I'm not saying the market's going to crash anytime soon, by the way. I'm very, very, very bullish. But what I'm saying is that we need to be prepared for this, because it's going to come at some point. It's going to come at some point. And if you knew what to do in, say, the COVID crash, you came out of it smiling and you made a lot of money. But a lot of people initially at least lost a lot of money, and then hopefully they made some of it back in the everything bull run. But markets are not always that generous and that kind. So just level up your skill set a bit. That's really what this is all about. So what actually happens? Well, higher borrowing costs, foreign investors might leave. You get higher taxes, you get less benefits, and you get persistent inflation. It's the only way to really get rid of this debt is like have higher inflation in the US. And what are they doing in the US? They're saying, we expect inflation to remain higher than it has been historically. And that's a problem if you work a job and you have a salary, or even if you have a business, but your business isn't growing at like 30% a year, but it's growing at a couple of percent a year, you're still going to be struggling. And we can avoid that. So what are institutions doing? Let's understand that first, and then we can understand which way we want to move. So they're accumulating tremendous amounts of cash, right? Like Buffett has 30% of its money, $300 billion in cash. So they're waiting for something to happen so they can buy something cheaper. Institutions are massively bullish on bonds. And then they're going into alternatives, gold, Bitcoin, right? And we're doing exactly that, by the way. We're doing exactly that. Not out of like speculation, but out of like, this is the one thing that actually makes sense when inflation is higher. And we are, and I'm sorry about the lack of spaces between words. Shift from growth to defensive stocks. Say it very, very quickly, 10 times. Yes, we want to move towards quality. Because, yeah, we're having this phase where rates are coming down and the growth and the rubbish is getting a really good kicking up, and we could be enjoying that. But we want to, over the next 6 to 18 months, we want to be moving more and more towards quality. And we're going to be moving more and more towards gold. That's me, obviously, and Rose down here. I'm not saying that's what you should therefore do. This isn't financial advice, but I'm just outlining to you what a lot of the smart money is doing. So write this down. I'll take a screenshot of it. You want to build a little bit of liquidity in there, a little bit of cash, right? You want to look at, like, what do I own? Are these actually good businesses? Are they making money? Would they survive a correction? And then I would look at gold. I'd look at some crypto exposure as a hedge against the dollar losing value, which is what inflation does. And be patient, my friends. Be very, very, very patient. Opportunities will be plentiful. They are. But we're being very selective every single week with what we're buying. So the question isn't whether it's coming, but whether you'll be ready. All in one word. One of the longest words in the history of mankind. We're going to have to Rash, who makes my slides. I'm kidding. I don't do that. I'm actually very nice to people. So but yeah, a few spaces there would be nice. So what are we looking for? We're looking at what's our allocation. So it's just a review, first of all. What sectors are you actually invested in, right? And then we look at what is the smart money doing. They do what? So the market has basically 2 cycles. There is the Euphoria stage. We're in that right now. That's when they increase their cash. And then there is the panic stage, which follows the Euphoria stage. That is when they increase their stock positions. So they act a little bit contrarian, and most of us don't, because the FOMO is so strong. When everyone's euphoric, we want to buy the latest thing too, right? I want to be 100% in, some AI stock. Please don't do that. That's really, really rather silly. But ultimately, what separates those who are going to make a lot of money out of this and those who are not is understanding what happens. So what happens with inflation? Inflation, if you're a bit of a conspiracy theorist, is good for some people. Who is it good for? And who is it bad for? Put it in the chat down below. I'd love to see whether you're with me on this one. It's good for, let's call them the rich, right? Asset rich would be the better way of putting it. That means people who own lots of stocks, lots of real estate, just lots of proper assets. Who is it bad for? Well, salary workers. Salarymen is what they call them in Japan, which is, I think, quite a good phrase. Why? Because their salary doesn't go up as much. Now, you might be thinking, but hang on, inflation isn't that bad. It's only a few percentage points. Okay, let me walk you through this. What is the actual inflation right now? Well, the government figure, it's like 3% or something, right? That's what the government tells you. But last year, the S&P 500, so the stock market, went up 25%. So the asset rich got 25% richer. What about the salary man? Did he get a 25% pay rise? No. Got a couple of percent, right? Because he was being told inflation's coming down. Maybe he got 5%. So what just happened here is that this gap appears where if you're a salary man, you're 20% poorer than the asset rich. Now, do that again the next year, and the next year, and the next year, and now that gap is like 90% or 99%. And what's the problem with that? Well, it means that a lot of the good stuff that you want to buy, like, good homes in good areas, right? Good vacations, good flights, all that kind of stuff that you enjoy doing, it gets significantly more expensive because these guys can easily afford it. But the government inflation figures don't really take that into account because they say that's sort of luxuries. But the reality is a good life requires some luxuries, unless you really enjoy living in the middle of nowhere and, you're just happy with your chickens or something, which is a wonderful way to live, by the way. I'm not judging and not bagging it, but for most people, they want the good stuff. They want the good home. They want the good vacations. They want the good clothes. They want the good car. They want the, whatever it is, restaurants, experiences. And maybe you've noticed this over the last couple of years. A lot of these things have gotten massively more expensive. Massively more expensive. I went to a very nice restaurant the other day. It's one of the best restaurants in town here in Hong Kong. And I knew it wasn't going to be, like a low budget sort of a thing. But the bill came in at $1,000 US. Kid you not. Now, I'm a vegetarian and I don't drink. So it's a pretty tough order. And I was just like, wow, this used to be, I remember 5-6 years ago, that was probably a $300 bill, right? So they have tripled their prices because the clientele they have, made 25% more money last year and 25% more money the year before and 25% more money the year before that. So they don't care. They don't even notice, right? And that's what's happening. Once you understand that, you can now go, you have 2 choices basically here. 2 choices. Choice number 1, become an angry communist, right? And demand that all wealth be divided equally. Now, we've tried that. North Korea is where we've tried that. And let me show you what the outcome is of that. Night satellite picture Korea. Yeah, that'll do. Can we get that bigger? Yeah. this down here is South Korea. That up there is China. That black patch is North Korea, right? And so you can kind of see that that doesn't really work, right? They haven't got any lights on at night, which is telling you quite a bit about what's going on there. So that's option one, and that's obviously, said slightly in jest. The second option is become more asset rich. How do you become more asset rich? You buy one more good stock, right? And the trouble with that is, how do you become more asset rich? Is you need a skill, and that skill is called money management. Now, you might think, I haven't got time for that. I'm not a money manager. Well, you're a money manager regardless of whether you want to be or not. Everybody's a money manager because what do you do for a living? Well, you earn, I don't care what your job is or your business is, you do it because you want to earn money, right? And then you spend that money, or you invest that money, or you burn that money, or you eat that money, or whatever, and you do something with it. And that process is called money management. Now, some people are better at this than others, not because it's some God-given talent. It really isn't. It's just a set of rules. And once you understand the rules, well, you become a better money manager. Maybe you're thinking, no, this whole money thing, investing, I don't want to touch on money. It's complicated, it's risky, I'm scared of it, and all that. That's natural because that's how we've been indoctrinated. But once you realize that this is just rules and it's actually a skill, what's a skill? Are you skilled at something? Well, let me know some of the skills you've got. I bet you are skilled at driving. You have a license for it, right? You're probably skilled at swimming. Can you swim or would you drown? Most of you can probably swim. You're probably fairly good at throwing a ball or knocking a ball or kicking a ball, right? And I can give you many more examples. Now, what do all of those things have in common? Well, you learned them. And who do you learn them from? From a coach or an instructor. And what did he teach you? He taught you the one thing that actually matters, which is the rules. You said before you take your car out and drive out, you got to go left, you got to look in that mirror, you got to look at this thing. It's incredibly confusing at the beginning, and then you did it for a few days or a few weeks, and now it's a sort of second nature. When you jump into water, you don't go and think, do I move my right arm first or my left arm first? No, you just swim, right? That's what happens when you master a skill. So what do you need? You need to learn, you need a coach, and you need rules. You need a decent coach, right? And by the way, I'm not saying I should be your coach. All I'm saying is find somebody who's done this on Wall Street institutionally because they've actually been taught the very rules. And if you do that, every calamity, every catastrophe becomes irrelevant to you. Yes, it's still sad because I know a lot of people are going to feel a lot of pain. Inflation is a horrible thing, and all that money that the government is promising you, which is fueled by debt, which is fueled inflation, is actually going to hurt the people who are worse off, the poorest, the most vulnerable. It's not a nice policy, but it is what it is. I can't change it. I'm not going to change it. I won't wait for governments to improve the world because I typically get disappointed, and I'm probably a cynic, but at least I don't get disappointed. So there is one thing that you have control of, one thing you can change, and that is you. So once you realize that you and only you are in charge of your financial outcomes and your freedom, it's really liberating because now you know, well, I can do something about you, right? Looking in the mirror. So come and learn with me the exit rules. When do we sell? Because if you start selling at the right moments rather than the wrong moments, you're going to have much, much better outcomes. And what do most people do? They do two things. They sell too early. So they have a stock that's up 20%, and they're like, that's all the profit I can handle. I don't want to be any richer. So they sell. And then it goes up, 100%. And then they kick themselves, or they buy it again at 99%, and then they watch it go down. And then the second thing they do is they don't sell. So say you are at 100%, and it's starting to go down to 80, and then they don't take profits, and then it goes to minus 30%, and all that beautiful profit. They never locked it in, and now they're down here, and they're doing this, and they're screaming manipulation. They get very frustrated, and they honk at people when they're driving. So to me, that is the most essential, the most important skill. Way more important than knowing what to buy, quite frankly. So come and join us on Tuesday, felixprehn.org/training. Rose will be, of course, leading the pack there. This little kitten. We've got 5 kittens, if you're wondering why these guys are around everywhere. And they're the sweetest, aren't you? Just the softest and sweetest little beings in the world. So if you got some value out of this, I'll see you on Tuesday, and share it with people. That's really all I ever ask. It's just share it with people. Just help us reach more people. Because if you do that with a bigger impact, more people will be happy. The world will be a better place. And that's, again, something that we can control. I thank you for watching. I thank you for tuning in. See you on the next one. We are living through the most extraordinary wealth creation moment in human and feline history. And right now, 3 world historic technologies are hitting their tipping points simultaneously. So this isn't just another market cycle. This is a once in an 80 years reinvention that will create $50 trillion in new wealth.